Hey everybody, welcome to the 4-Star Podcast today. Today is the 9th of September. So this is our first podcast for September of 2021. So we're past the summer now. This is demonstrably the fall. It's getting a little cooler, Chris, isn't it? Let's get started with our podcast for today. I'm Brian Kasal. With me again is my co-host, Mr. Christopher Reardon. Chris, welcome to the podcast.
Thank you, Brian. Glad to be here. And I agree. It's glad we're getting a little bit of cooler temperatures. I think for a couple of weeks ago, it was like for an entire week, 98 degrees. It was pretty brutal here. So I'm glad we've seen a little bit of a cool off.
Yeah, it's nice. It's nice. And well, folks, Chris is our Director of Development, Master of all things portfolio, trading, reports, products. He's amazing with our 4-Star team. He's also the caretaker of his golden doodle puppy, Hudson. And Mr. Christopher Reardon has a new addition, Chris, Avery.
Correct. Our newborn daughter, over 2 weeks old now. So she's healthy. So all is well there.
You look like you're getting some sleep, but I don't think that'll happen for very long.
It's sleep is hit or miss, but take it when you can get it.
That's right. Well, congratulations, Chris, and welcome back. Took a few weeks off in August to welcome his daughter, and we're glad to have him back. I'm Brian Kasal, the founder and CEO of 4-Star. I'm an Eagle Scout, a trustee of the National Boy Scout Foundation. I'm advisor to CEOs and insiders and chief dad to Quinn and Evan and husband to the amazing Tripty. Let's put in our commercial. If you like what you're hearing, please tell your friends. 5 out of 5. We also, for those who are just listening to us, we're on Instagram, LinkedIn, and TikTok with different video clips of this very podcast. So certain things that we will say will be clipped into 30 to 90 second videos. And so please also follow us on TikTok and Today's Market Explained. And then you can follow our firm, obviously, on LinkedIn and Instagram, and of course, Facebook as well. But we don't put the videos out on Facebook. Anyway, so we are going to do our normal podcast today. We'll talk about the markets, the economy, and then other things that we see out there. Chris, do you want to give us an idea of what's going on in the markets? Have we had much change since you had gone away for your baby birthing break?
Yeah, not a whole lot of change. Domestic equities is still number one, and a positive aspect, it actually gained 3 tally points from the last podcast we did. So it firmed up to 319 now. For those of you that have been following along, kind of towards the mid to early summer, we did see it kind of drop down to about, I think low was around 313, 310 in that range. So the fact that it's kind of moved back up is positive. Commodities conversely dropped 5 points from the last podcast, so it's at 265. Most of the movers there, energy, we did see energy kind of pull back a little bit, and then you have precious metals as well. We're kind of the two movers there. International equities lost 1 point, relatively stable in the third position at 238. And then the bottom three of fixed income, no change from the last podcast, and fourth position at 118. Cash actually gained 3 in the fifth position to 97, and currencies, no change either in the sixth position at 48. So overall, relatively muted. I think the trends overall pretty positive. We're still seeing a little bit of volatility. I think that's showing up mostly in the commodities, sector where we have seen energy kind of come and go. We've seen precious metals move around. So we're still seeing a lot of movement there. That's being reflected, but overall, it's been relatively stable.
So, Chris, we only saw gains in U.S. stocks and then in cash, which is in the fifth position. Everything else was either unchanged or faded. But that doesn't tell another story, though. The commodity area that faded a little bit more, it's down 15 tally points since the beginning of August, showed some big changes, right? Energy and precious metals were down, but and agriculture were up, right?
Yeah. So, I mean, and the biggest contributor really was energy. I mean, I think energy, the commodity sector has really almost lived and died by energy, I would say, with this last recent spurt. We saw it really spike up because we saw energy kind of I would say as we were coming out of the pandemic, you had a lot of travel coming back into play. You had a lot of demand come back, but you didn't see supply come back, right? Because things needed to get back online. So you saw energy spike back up, and that really brought commodities back. On top of that, we have had industrial metals, which we've talked about on here, be strong, and agricultural has been, relatively stable. So that's positive. Precious metals have been the other kind of aspect that has waned a little bit, but precious metals have really been a non-factor. I would say most people were really speculating on gold, but it's for the inflation talk, for a lot of the factors going on right now in the market, it really hasn't come into play as much as I think people were expecting.
Yeah, I really feel, in talking to the normal suspects that might buy gold, that a lot of those folks are looking at Bitcoin and Ethereum and other cryptocurrencies. It's almost like the cryptocurrency world has taken the steam out of what is normally a bounce back sector in rough economic times, which would be precious metals. Anybody who was around in the 70s and the 80s remember the gold bugs, and there were investors that that's all they did, and gold tripled in the 70s and topped out somewhere in the early 80s after the big inflation run. But we're not seeing any of that now. We're seeing inflation without gold moving. It's just commodities are moving, and Bitcoin ran up to 65,000 a unit, down back in the 40s or whatever now. But it's interesting, isn't it? It's a little bit of change. Yeah.
Yeah, you definitely see some speculation out there and everything. So it's interesting, and remains to be seen. I think ultimately, when we really see inflation go, we'll see what happens. But if maybe gold does make a comeback, who knows?
Well, and if you look at our dynamic portfolio, which is partially in commodities because it's ranked number 2, the industrial metals area, the coppers and the zincs, those are names that appear, not zinc, but copper appears in the dynamic. We also have agricultural commodities, cotton, and other things. The general agricultural ETF is in there as well. So our portfolios do reflect those changes and those moves. And so we're gaining nicely in the last month. But the overall general averages are right near a new high. We've had a couple pullback days recently, but we're still right near new highs. And at any point, I just want to remind everyone, at any point we might get a market breather, anywhere from 3 to 7% down from the high. And it doesn't mean that there's any big problem. It means the market got a little extended and it just pulled back, and some people took some profits. But as far as a big all encompassing collapse, we don't see that coming. But at any given time, you can see a 3 to even as much as 10% correction.
Yeah, I mean, I think that the market right now, it's really got its pulse on what the Federal Reserve is going to do. So I mean, I think you see kind of these taper tantrums is what they like to call it. So it's really been this interesting dynamic, because if negative economic news comes out, you would expect the market to take that negatively, but in some cases it's taken that and actually made it positive, because if negative economic news comes out, the probability of the Fed tapering maybe gets pushed out further, which means looser monetary policy, which means that the market just likes that. So it's been this really kind of weird relationship going on right now, but it's definitely a news-driven market, so we can easily see a 5 to 7% pullback. If certain news comes out, in a week or two.
And we've not had a 5% correction since the bottom in spring of 2020. So we're a year and a half on from there. So at any given point, we could have that. But volatility's been low. The leading sectors, again, are technology and utilities. But we used to see technology leading all the time last year, of course. And then technology faded from November to somewhere around April, and then took off again. So technology's been very strong. Our friends at Canterbury that track all the different groups, and they have market states, rank the market in market state number 1, very low volatility, which is the strongest bull market sector. So clearly in a bull market. Interestingly enough, Chris, communications and technology have been forming a bubble for a while. Now, is it over? We don't know. Will it continue? Perhaps. We'll find out. But In 1999, before the tech crash, the tech and telecom sectors together were about 38% of the overall S&P. Now those two sectors together are 41% of the S&P, and it doesn't look like it's going to end anytime soon. So what does that mean? Does that mean that they're overpriced and we're ready for a collapse? Or does that mean that technology and communications and all the technology aspects of the economy have been really the driving force of efficiencies in the growth of the American economy? And I think there's a good chance that that's true. Most of the efficiencies of companies, even in our industry, we've seen it come from having systems to make you more and more efficient. And that's spending on technology, Chris.
Yeah, I mean, and I think, you look at how, I think a way to explain this even is, I look at a company like Disney, which you go back 30 or 40, 50 years, it was just the theme parks kind of, and maybe the brand. And now you see Disney and it's morphing a little bit. It's, you have the streaming service, which is, fastly catching up to Netflix, and almost gonna, and estimates now maybe be the top streaming platform. So you look at a company and it's kind of like it's all at all-time highs. Does that mean it's overvalued, or does that mean it's just found a way to get more productivity? It's found a way to get new resources and new revenue sources. So that's the speculation. Is it overvalued, or is this just the new value kind of for it?
Yeah. Well, and so when you look at it, technology making everything more efficient, companies now, whenever they are better and growing faster, oftentimes they bring technology in to make them more efficient. So there's a technology efficiency component in energy stocks and retail, even in restaurants. And there's so many different sectors in which they're growing faster because they're more efficient at their business because of technology. So when we talk in terms of technology, we're talking in terms of the technology stocks, but other industries have been growing because of technology efficiencies as well. So it's hard to always quantify all this. That's why they call economics the dismal science, because so many factors built into all these things that we don't quite understand at all, do we?
Nope. And one thing could mean 10 different things to 10 different people, right?
Exactly. And last 8 years, technology has been very, very strong. And in fact, we might remember that no one had an Apple iPhone until 2006. It was introduced then. And so just think that almost seems like we can't even remember a period of time when everyone didn't have some sort of a smartphone in their pocket with all their notes and everything else in there. So all that's happened since then. And initially in the late 2000s, between 2006, 2009, there was such an explosion of technology. That, and then prior, in the late 90s, there was an explosion of technology, and then it crashed. But did that mean it was over? No, it just got a little over exuberant, and then it came roaring back. iPhone came in 2006. So then we had a big market crash in 2008 because of mortgages and other things. But then technology came roaring back. The efficiencies kept roaring back. And so technology has been a big part of the world prosperity and efficiencies all throughout the last couple of decades.
Yep. No, I mean, I think it's interesting. I think one of the things that's crazy to think about, I was watching a documentary a week or two ago, and it was saying how, with your phone right now, you have more computing power than was used to land people on the moon, which is pretty crazy to think about.
It is crazy, but it's true. It's true. Now, that said, as we hit new highs here, there's also been kind of a narrowing of the leadership in the market. So the advanced decline line of stocks advancing versus the stocks declining has stopped going up. It's been flat now for 4 months. So that means the acceleration has slowed. And then the Russell 2000, which is the small cap stocks, they've been flat now for 4 months. So there's a lot of groups that are not performing as well as the technology and the S&P, but yet the indexes keep going up, dominated by those large names. So we're seeing the same kind of market that we saw in the late 90s. And of course, that ended badly. The question is, how bad will this market end? But I don't see it ending anytime soon because we're in an economic recovery. Now, if the economy were to slow down or there are some other big ominous signs in the future, well, then that's always possible. But we don't see anything like that right now.
Mhm.
So, moving to the economy, Chris, job openings hit a record high, and initially of over 10 million new jobs that are available, job openings, and not new jobs, job openings. And the markets initially thought it was a positive because there's more companies putting out jobs, and that's a good thing, right? The economy's going. But then some thought it was weaker because there's jobs out there that are not being taken up by workers, right? So that's, again, one of those things where at some point, big time job openings is a negative, but in the short run, maybe it's a positive because the companies are actually posting jobs. And then eventually we'll see in the next month or two if those jobs are taken up and that the job opening number starts going down as people come back to work. And we think there's reasons why they might. Chris, you had talked about different parts of the economy being stronger and weaker.
Yeah, I mean, so I think from especially from a job opening front, trends we've seen industries such as warehousing, manufacturing, mostly even in finance, do a much better job or much better at recruiting people for those job openings than maybe restaurants, service industry, leisure industry. So we're seeing this kind of split there, and it's really interesting because you had, I know everyone's probably experienced it. You go to a restaurant and they're understaffed. There are aspects that I think we'll talk about in a little bit that as to why that could be, maybe extra benefits, things like that. But there is also the competitiveness of the labor market. What we're seeing is these warehousing jobs and manufacturing jobs. They're paying a higher wage. Those people can maybe get a fixed schedule that they like better. So we're seeing that market competitiveness in the labor market pull people away from the service industry, in the short term now. So it'll be interesting to see, what would that mean? Would that mean that, to compete, are they going to have to pay wages similar or relatively similar to the warehousing and manufacturing jobs, possibly? Or are we going to see, as we see maybe more people enter the labor pool with certain a decrease in benefits, things like that? Are we going to see, you think, supply and demand? Are we going to see supply increase? And that'll, hopefully stabilize things out a little bit more. So it'll be interesting.
So jobless claims were less than expected too, right?
Yeah, and jobless claims came out last week, so it's the week of September 3rd for reference. They came in at 310,000. The expectation was 340,000. That's positive. It's the lowest of the pandemic from a jobless claims perspective. It's the lowest we've seen of the pandemic, and it's getting closer to that normalized number. Usually normalized is under around 300, mid to high 200,000s, depending what kind of market state we're in. But that would start to be a more normalized jobless claims number. And I think it also proves to the fact that we are seeing this Delta resurgence. And we're not seeing people be laid off. I mean, that's what that would show to. We're not seeing the mass layoffs we saw, in the March, April, May of 2020 when we had kind of had a big, resurgence initially. So I think that's positive. I think it's positive that we are still seeing those employment opportunities, I should say, jobs openings. So, overall, the labor market in the U.S. seems relatively strong.
Looks like it. And now the ECB is slowing some asset purchases, I believe.
Yeah, and then on the international front, now the ECB, they just announced earlier this week that they're going to start to slow their asset purchase, which, as we talked about on here, the biggest news I think the market's staring at from the U.S. perspective is with the Fed tapers. And the fact that the European Central Bank is looking to possibly kind of slow their purchase, I think is positive. I mean, it's positive from a global perspective. It means overall the global growth is starting to kind of pick up, which is really positive, and that's something that can help the U.S. Long term. If we have the European Union kind of stabilize out, you can purchase goods from the U.S. Just overall global growth will be strong.
Yes. Now we talked about metals, Chris. I know you looked into aluminum.
Yeah, and then from a commodities front, I would say aluminum prices earlier this week, and so it's the week of September 10th here, I think it was September 6th was the kind of the high mark. They hit their highest level in a decade. So I think the highest level since May of 2011. The reason for this was actually, many of people may not have heard, but in Guinea, there was a coup and they overthrew the ruler of Guinea. So Guinea is the second biggest producer of bauxite, which is a major raw material for aluminum. So when I think there's their second biggest producer. So the fact that, we have that decrease in supply there has really constricted the supply of aluminum long term. So we could see elevated aluminum prices, for, the near future, maybe a year or two. And obviously that impacts, cans are made of aluminum. You have a lot of cars that are made of stamped aluminum now, have gone away from steel, at least for the chassis and bodies on them. So we could see that kind of play out. May not be the very, very short term, but maybe over the next couple of months in certain products we use every day.
Yes. Well, and we talk steel, and steel is doing better in America. Had an experience, interestingly. We drive back and forth through a steel territory in Gary, Indiana, to a home we have over in Michigan. And, that was the home of steel for a long time in the 50s and the 60s. And then they fell into hard times, and then things got more efficient. So even when things were better, they never rebuilt the employment levels that they had at steel mills from before. But there's a whole bunch of steel mills that are still in the Gary, Indiana area. And the Trump administration had decided that steel was really an essential industry, with world competitors, China rising, an avowed attempt to take over the world and to be the leading economy in the world. Many countries are subsidizing industries like airplane manufacturing, steel manufacturing. So President Trump decided, if they weren't going to play fair, that he would put tariffs on steel coming into America to protect our industry, because we do need steel, and we do need steel production in America. So the Biden administration has continued with those steel tariffs to keep the steel industry stronger in America. And just this past weekend, we were driving by Gary, and they have a whole row of different steel mills and smelter buildings and things like that were all owned by ArcelorMittal, the big steel manufacturer headquartered, run by Lakshmi Mittal, headquartered out of London. And just this week, many of those have turned over to Cleveland-Cliffs, the American steel manufacturer. There's Steel Technologies, and a few other. U.S. Steel still has a small plant there as well. So big changes in the steel industry, but to see all those steel mills change from one big mill manufacturer to another, there's big moves being made in the steel industry. Steel is viable again in America. And so people are investing in steel because we're no longer having predatory pricing, which is the term that's used when people price below their cost. That's what was going on worldwide. And so now with the tariffs, they're no longer able to get away with predatory pricing because the tariffs are bringing their costs back up. So our industry is now viable again in America. And we saw a big change. So there's big changes going on in the steel business, with Cleveland-Cliffs coming in to buy all those steel mills from ArcelorMittal. I don't know when it exactly happened. We just saw the name changes here over the weekend. So a lot of interesting things happening in the commodities and steel markets. And that kind of leads into a subject we'll talk about in a little bit regarding security. But I'll get to that in a little bit. But so that's good news. The other part I wanted to mention was, we did ask everyone at 4-Star, what kinds of experiences did you have over the Labor Day weekend? Were the crowds big? Were people out? And we got really interesting reports that people are now out. One of our advisors was in the very, very packed San Francisco airport after having left the Chicago airport. The normal 1-hour drive to Santa Rosa took almost 2.5 hours because of heavy traffic. So people are out on the roads. People are ready to party, to have leisure time, to work. They're ready to be out there. We were in the Blueberry City, which is South Haven, Michigan, and they grow lots of blueberries there. The wineries and all the stores were mobbed with people. Haven't seen that in a couple of years. And we're getting anecdotal reports all over the Midwest and all over the West Coast all over the East Coast of similar experiences. So it seems like America's back. The pandemic is waning. Even this variant is now starting to wane, the Delta variant, even, albeit while they're putting more mandates on, but nonetheless, the variant itself is waning. So people are ready to be out there. They're ready to go to the blueberry shops and the wineries and the golf courses and all the things that Americans like to do. So.
Yeah, I mean, I think, from my perspective, I think the population is starting to get used to, the coronavirus or COVID. It's going to be something that's endemic. I mean, we're never going to get rid of it. So, I think the quicker we kind of normalize and kind of go back to traveling and enjoying and all that, it's going to be around us. It's just going to be a new part of life, and you just deal with the best can, wash your hands, try to stay safe, and go travel, go enjoy it. And I think that's what people have done, which is very positive.
Yeah. Well, and now coming forward as we enter the fall, some big changes in the economy that will hopefully now get the economy going. The extra benefits that had been added during the pandemic era, the $300 a week of extra, which is a substantial $1,200 a month additional benefit for unemployment, that goes away now. And certain states had opted out a couple of months ago, and the opt-out states are doing much better than the opt-in states. But now everyone's an opt-out state because that benefit has gone away in that regard. So the question is, is that going to hurt the economy or going to help the economy? Well, most of the studies have shown, based on the results of the opt-in and opt-out states, that those benefits are actually hurting the economy. That people were not going back to work, employment was staying low, job openings are staying high, and that was part of the issue. So now there's a sense that the extra benefits going away will help the economy grow, and there's clear evidence that the extra benefits were hurting the economy, Chris.
Yeah, I mean, I think like we've talked about on here, it's, the best stimulus is a job. And I think that as those go away, will we see the labor market fill up? We have a lot of job openings. So will we see that kind of fill that void? Economics say it should, but economics is, as Brian said, the dismal science. So we don't know necessarily until we see it happen. So hopefully we're optimistic that over the next couple months, we'll start to see that labor market tighten a little bit. We don't want to see that many job openings. We want to see those jobs be filled. We want to see those people have jobs, be happy, and all that. So hopefully that happens. I mean, I'm optimistic that it will, but we'll kind of have to just keep our ears out there and just see what happens over the next couple months.
Yeah, now there's an incentive to get back to work. Anyone that's had bad service at a restaurant in the last couple of months because the restaurant workers are overwhelmed, maybe there'll be more workers there going forward now as they have to get off the couch and go back to work and that kind of thing. And the U.S. economy is going to be basically, we think, spiked partially by the stimulus withdrawal. And the Chinese economy is slowing right now too, Chris, right?
Yeah, we're definitely seeing some slowdown of the Chinese economy. I mean, the numbers that are there, the latest ones reported were slowing. And, what we've talked about on here before is, China likes to kind of, sprinkle a little bit of fairy dust on their numbers, if you will, to make them sound a little bit prettier than they are. So the fact that they're showing it slowing usually means that it's a little worse than, or not greatly worse than the expectations there. So I don't think that's anything out of the ordinary. They bounced back extremely quickly, or quoted they bounced back extremely quickly from the pandemic. And I think, you have almost a spike up, and I think it's definitely going to have to pull back from that initial spike, anyway. And kind of renormalize out to the global growth that's happening.
Absolutely. Well, moving on, Chris, from the economy to what we see out there, number of trends are changing in the economy. One is, there's a general understanding now that since we do have competitors out there that have different goals than we do, like China, for example, and Russia. And they want to dominate the world, and they want to do it in their way, not capitalism. They want communism, maybe. They want socialism. They want more control than America has over their people. That they're not so concerned about freedoms and things like that. So when it comes to security and sovereignty, many of these issues are very important. We need to keep a viable steel industry. We need to keep control of our technology, all our intelligence apparatus and things like that. So we're seeing more and more of that, where investing is happening now in America for that very reason. And we've tariffed countries to keep them from taking over industries that are key and important to us. So there's a lot of things changing there. And you would think, Chris, that if America's found a way to be more efficient, we've created more prosperity in world history than any country in the world. And capitalism as an economic system has created more prosperity than any system ever in the history of the world. Is it perfect? No, but it certainly has created tons of prosperity. Why wouldn't everyone want that? Why wouldn't countries around the world want that? Well, many countries do, and they're adopting it. Certainly, Europe is mostly capitalistic, some socialistic tendencies there. And other countries of the world are going democratic and capitalistic, but there's still many countries that are going the opposite way. Afghanistan fell now. We don't want to get into that whole discussion, but clearly they don't seem too concerned about capitalism. They care more about religion. They care more about culture, and they're not worried about the economy. I can't imagine what their economy looks like with all the things going on over there right now. So there's a lot of countries in the world that don't necessarily care about their economy that much. China attacked IPOs that just came public to the point that one of the companies had to back away from their IPO and agree to pay investors back because the Chinese government got mad at a public company. So if they were really about capitalism and growth, they would never have done anything like that. So many countries have different objectives than America. And one reason for us to try to keep America sovereign and protected against all these people that don't believe in liberty and freedom and capitalism and prosperity.
Yeah, I mean, and my 2 cents on it, I think that, we're in a very heightened geopolitical environment right now. I mean, it's pretty crazy with where we're at now, with China, with Russia, and even North Korea out there. It's definitely, something we have to look at. I think the biggest one that, they're evaluating now is semiconductor chips. What's our risk and exposure to that if supply chains get cut? Because a lot of that comes out of Asia, the semiconductor manufacturing. So, there's definitely some geopolitical risks going on right now, and we're definitely in a heightened environment. So I think from the capitalistic perspective, I mean, that's why China is trying to move there. There's a lot of benefits to capitalism, but there are also drawbacks to a degree. I mean, it's not a perfect system. It never is, and it never will be. And same with kind of, if you would say communist or socialism, there's a lot of drawbacks there, but there are benefits to it. And one of the benefits is if you have something like a pandemic happen, one of the reasons China can bounce back quicker is because in a socialistic environment, you can ramp up spending via government spending. So each system is slightly different. I think long-term capitalism is by far the best. But the reason, certain countries like to adopt other is power and, what's the short-term goals of the country. I mean, certain things will look better in a certain system, in certain phases of the government or phases of the country.
Well, and there's been a big trend toward woke capitalism. In fact, Vivek Ramaswamy wrote a book called Woke Inc., talking about all the trends within capitalism where certain objectives are being fostered. It has to do with more politics than it does with economics. But then so many companies are doing that it seems to be more than just politics. They think of it as an economic strategy. And it may be an economic strategy. I mean, some of the folks who are proponents of the Milton Friedman style of capitalism, where a company's role is to make a profit, consider woke capitalism to be a big betrayal of capitalism, that you can't have objectives other than companies to make a profit, not to, can be concerned about more social issues and things like that. It really all depends on what people decide is important. And if that's important, maybe some of those rules will seep into the economy. But there's a big backlash to it as well, as Coca-Cola saw last year when they made certain restrictions that were more social oriented. and there was a big backlash, and certain companies had big backlash. So I was thinking about this, Chris, and I remember a quote, and I looked it up from Adam Smith, the famous economist. And, it's the way capitalism works. People sometimes forget it. We're all nice people, maybe not. But it's, the quote is, it's not from the benevolence of the butcher, the baker, or the brewer that we expect our dinner, but from want for their own self-interest. So we address ourselves not to the humanity of it, but to their own self-love and self-interest, and don't talk about the necessities, but rather of their advantages. And that's from Adam Smith, the famous economist, Wealth of Nations. So what I would say, basically, the idea is capitalism is designed to create wealth and to more efficiently deal with all commodities and issues in the economy. It's a very efficient way if we all use our own self-interest, where some of those other new systems people are proposing, woke oriented capitalism, is much more for social ends. Maybe there will be a merging of the two at some level, but they usually go too far with things and maybe getting carried away. Now, at that point, I know that certain companies like American Express decided to use some of their profits from their credit cards to favor certain groups in credit scoring and things like that. Now there's backlash against that. So I guess whenever we get too far off capitalism, sometimes countries and companies get into trouble with the people that they're trying to serve. So we'll see how things shake out. We'll learn more and more about that over time. Chris, anything more on that subject?
Yeah, I mean, I would say, what company really pioneered that, would be Nike. And we saw this a couple of years ago when Nike had a bunch of ads with Colin Kaepernick, things like that, that really highlight, certain social unrest. And, I would say whenever you have and a company does take a stance like that, that's the advantage of capitalism. I mean, they're making a bet. Sometimes it doesn't pan out, and you have other companies like Under Armour or other companies that take advantage of that, go in the opposite direction. So, you have a lot of underlying currents going on in the market now. We'll see if it stays. I think the other big thing you're seeing right now, it's been huge, is ECG. You have kind of the environmental, or ESG, environment sustainable companies, and they're kind of slapping that moniker. Companies are on their own companies when they're not really, have nothing to do with it. So they're just trying to kind of cater to a certain sect of the population. It'll kind of wiggle its way out, I think. Like you said, capitalism has a way. These are companies. They ultimately want to, optimize the bottom line. And so, if it's not favorable, if it's hurting the bottom line, we'll see it deviate, down the road.
If it works, it works. But, studies have shown it isn't working really well. I know there's a big trend toward DEI, diversity, equity, and inclusion. And those are, terms some companies are throwing around. Some are actually making policies based on it. And that's fine. And if it works for capitalism, great. If there's other social goals that are more important than capitalism for some companies and their shareholders are okay with it, I guess that's fine too. But then, the markets react to those things also. So we're in a competitive environment, and we all get to vote, essentially. Do we buy this stock? Do we buy that stock? Do we buy this good? Do we consume this product? And so we all make our decisions based on what we see. So anyway, big subject. I don't know that we're going to find an answer to that one, Chris, but maybe we just leave it there on that one. I think that's it for the week.
Yeah, no, I think that covers it.
All right. Well, thanks everybody for being with us today on the 4-Star Podcast. And I will say that we believe in America. We believe in the capitalistic system. We do believe in freedom and liberty and all the things that made America great. And so let's carry on that way as capitalists here in the fall. And we'll be back very soon with another podcast and a bunch of new interviews coming as well. So thanks for being with us today.
Thanks, guys.